You are listening to the audio portion of the QB Power Hour webinar series. The QB Power Hour is a free bi-weekly webinar series for accounting professionals presented by Michelle Long and Dan DeLong, who are very passionate about the industry, QuickBooks, and apps that integrate with QuickBooks. You can find out all the details about the webinar series at qbpowerhour.com. So without further ado, here's Michelle and Dan.
Welcome, everybody, to another QB Power Hour. We're very glad to have you joining us today for the weird, wacky, wild world of sales tax with Avalara. Say that 3 times fast.
Tongue toaster.
Yes. My name is Michelle Long. I'm a CPA with an MBA in entrepreneurship, owner of Long for Success. Been a contract trainer for Intuit for a very, very long time. And very glad to have you all joining us here today. There you can see the links for the Facebook group as well as LinkedIn. And the Facebook group especially is just very active. I'd encourage you all to get out there and check it out. That's enough of me. Dan, your turn.
Yeah, so I'm Dan DeLong, owner of Dan With. Worked at Intuit for nearly 18 years, and a lot of that had to do with talking to businesses about their sales tax woes. So I'm glad Avalara is joining us here today to ease some of that burden. But co-hosting today, we also co-host the Workshop Wednesdays on Schoolofbookkeeping.com. And Clayton, well, go ahead and introduce yourself.
Yeah, my name's Clayton Goodyear, and I'm the guest today. And while Dan and Michelle, I would expect, spend some of their time talking about sales tax, I spend all of my time talking about sales tax. I lead a group called the Emerging Business Group at Avalara. I've been at it for the last 10 years with Avalara, and predominantly me and my team spend our times just trying to help small companies navigate the wild, wacky, not so wonderful world of indirect tax. So you
never throw the word wonderful in.
I think I said non-wonderful. I caught myself. The unwonderful, wild, wacky world of tax.
Gotcha. Well, thanks for joining us today. A little bit about the details about the QB Power Hour webinars. If you're just joining us, it's every other Tuesday at 12 Eastern. Not eligible for CPE yet. We are kind of working on that. Some of the things, topics that are coming up. Well, next time we'll be talking about desktop migration, doing a demo, and some best practices when you're converting a client from QuickBooks Desktop to QuickBooks Online. And then Alicia Katz-Pollock will be joining us in May to talk about what she's discovered about some of the niche nuances of convenience stores and gas stations. Which every time you drive by one today, you're looking at and shaking your fist at the price tag of gas. So they have some unique things about that type of industry. You know, something like the lottery. You know, how do they handle the lottery sales? So join us for that. We'll be talking with Bookkeep. We'll be coming in about managing multiple payment methods across multiple sales channels. So all of your Stripe and PayPal woes, we'll be talking about that. And then we'll do a deep dive into the Practice Ignition solution. So all the resources are available on qbpowerhour.com/resources. So we have the slides, the podcast, prior webinars. So take a look at that. And, if you have any questions or looking for some resources there. Wanted to talk a little bit about some of the QB Power Hour website updates. So if you go onto our homepage, rather than having like a calendar like we did before, and you could see my personal calendar things, I decided to change that a little bit so that you only see QB Power Hour events. But you can add it to your Google Calendar directly from those events, so that if you see a topic on an upcoming event, you can add it right to your calendar as well. And we're looking forward to creating a QuickBooks Power Hour marketplace. Basically, what I've been seeing a lot on our Facebook group is sometimes people will slip in an advertisement for themselves. So rather than have it clog it up on the Facebook group, we want to make a searchable directory so where people can kind of put their own classifieds on the QB Power Hour. So if you have a niche nuance of gas stations and convenience stores and you need help with that, you can maybe reach out and partner and work with that type of individual right there on the listing. So look for those coming out pretty soon. A couple of the housekeepings, of course, as we talk about sales tax today. Any questions dealing directly with the topics of the day, please put that in the Q&A. We do have some folks from Avalara lurking in the background, being able to help answer some of those questions as they might come up, because as you may have guessed, there's going to be some topics of weird and wacky wild stuff when it comes to sales tax. So bring your water cooler discussions to the Q&A. If you have something as far as a comment of like, "Hey, nice glasses, Dan," put that in the chat. Thanks, Rich. And then, of course, we have the links there for the handouts as well as our webinar archive today. So today our agenda here is to talk a little bit about the QuickBooks Desktop sales tax overview, moving into the QuickBooks Online sales tax and how that works with the automatic sales tax, and maybe you might still be seeing the classic sales tax center. And then we'll hand it on over to Clayton to talk about what is Avalara, some of the weird and wacky sales tax laws that he's come up with or that he's seen come across his desk, and then really just how Avalara works. But before we begin, we want to talk about sharing and be entered. So the folks at Avalara have been kind enough to provide us with a couple $100 gift cards that we'll share with, or we'll do a drawing. I gotta find the link.
Easy for you to say.
Yeah. So we'll do a spin a wheel next, probably later on today. But go ahead and put that in the chat here. So go ahead and share today's webinar landing page with the QB Power Hour on whatever channel that you prefer. If you got Facebook or LinkedIn or blast out an email. If you can do that now, you'll be entered. Put in the Q&A where you shared it to, and then that will enter you into a prize wheel where we'll spin a couple times later on today and award two $100 Visa gift cards. These are not Amazon, so you don't have to spend it in a certain place. You can put it wherever you like. And while you're doing that, we'll also launch our first poll. So, what versions of QuickBooks do you support for your clients? Now, Michelle, you had a good story about sales tax with regards to like why you don't do it, right?
Oh, yes, absolutely. This is why I recommend people contact Avalara. Well, it's just, everything is so complex and so complicated. And if we go in and set it up, and you're going to see it's so much easier than it used to be, especially with the auto sales tax and QBO and things like that. The problem is if it's set up incorrectly, who's liable when the state comes and does an audit and realize that they didn't collect sales taxes like they were supposed to, and now they owe $100,000 back taxes? Who are they going to turn to? Us as the accounting professional, because we didn't set it up correctly. And I remember you guys are going to learn some fun facts from Clayton today about what is and is not taxable. And I remember years ago, I learned from Avalara that you could have a Hershey's bar. Oh, I don't want to give that one away. I'll save that one for later. But you could have, let's say, 3 houses right next to each other, and the house in the middle could have a different sales tax rate than the 2 houses next to it. You can't just go by address or you have to go by address. You can't just go by zip code and things like that. And just getting the items and whether they are or are not taxable. Even for us as an accounting professional, I know in some states, if you bundle, like let's say you're charging somebody $1,000 a month to do their bookkeeping, and that includes a subscription to QBO and Avatax or something like that, you're bundling in the cost of the apps, that can trigger and make all your services taxable. I think it's like Ohio, they have to invoice for the apps separately from their services on a separate invoice so they don't trigger it as all taxable. So I am a CPA who does not like taxes at all. And here we are at tax time. I've got to look at mine in the next week, right? But especially when it comes to sales taxes, I just recommend we turn to somebody who's a SALT expert, state and local taxes, or, use something like Avatax and Avalara to help with some of that. Because now with the new Wayfair rule and Nexus, and I mean, it's too complex and the risk's too high for me. I don't want that risk. So that's my 2 cents on it.
and a valuable 2 cents that is. All right.
Yeah, these days it would be 4 cents.
Right.
Inflation.
All right, so go ahead and continue on. So it's when it comes to sales tax, setting it up in QuickBooks Desktop is entirely different than it is now with QuickBooks Online, and Michelle's going to talk a bit about that. But with sales tax in Desktop, there's a item-based calculation can be used for most instances, but some of these things that Clayton's going to mention might not be able to be supported the way that you set up these things inside a desktop. But the burden is on you to know the rules, right? So that is part of the challenge of setting these sales tax up in Desktop, is that you need to know what's taxable, what rate it is, what combination of setting up those items might be. So where sales tax lives in Desktop is on the item list. So you create a sales tax item, and then if it's a combination of multiple items, so you've got your county, your state, perhaps your locality, you'll set those up as items, and then you'll combine them in a group, and then that can be used on the sales transaction, even in the body of the invoice. So you can get very creative on how those sales tax items are used. If you need to. So like, in some cases you'll have a threshold, right? Where it's like a certain dollar amount is one rate, and then some things above that is another. You can use these items right directly on the body of the sales transactions in order to, calculate the right amount of sales tax. But again, leading back to that, the burden is on the user setting it up, right? So you need to know that in order to figure out how to set that up. Once you've set it up, then the reports are pretty robust, where it will break down the total sales tax, the non-taxable sales, the taxable sales, the tax rate, and what is essentially sales tax payable to the entity or the tax agency. Oftentimes you're going to do that in, you're going to be making the payments inside of QuickBooks, but you're not able to e-file or prepare your return. You're using these reports in order to help create those returns, whether that's going to the tax agency's website, filling those out. But as long as you've set it up properly, you can get some pretty robust reports inside of QuickBooks Desktop. And then, of course, you can pay your sales tax through, and everything goes through the sales tax payable. And again, it does not file or e-pay. One of my favorite stories is a friend of mine used to work at the Arizona Department of Revenue, and inevitably she would always get business owners coming in saying, "I can't afford to pay sales tax." And that's when they have that conversation of, why are you spending the state's money? And what's the difference between a liability and an expense? So a little ad hoc bookkeeping lesson at the Department of Revenue when the business owners would say, make that statement, because it was always like clockwork. It was always figure it out, like, okay, here it comes, and now, okay, you're not. This is why you're holding it on behalf of the tax agency. Okay, so let's go ahead and pass it over to Michelle, where we talk about the two different types of sales
Okay.
tax centers.
And you're right, Dan. I mean, so many times when we get a new client, a lot of times we will see they've got this huge state tax expense, and sales tax payable is like $50,000, $100,000, because every time they pay it, they enter it and post it as an expense instead of relieving the payable, because they think of it as an expense. So you're right. They're just a collection agent for the state. You're collecting it from the customers and passing it through to the state. So one of the great things about QuickBooks Online is the new automated sales tax center, because it does help to keep things a lot easier to do sales tax and everything. But, there are a few caveats that I'll mention here in a minute. So with the automated sales tax, you don't have to set up the rate. The sales taxes are going to be calculated automatically. And this is awesome because let's say the sales tax rate's going up at the beginning of the year. You don't have to remember to change it. I mean, how many times have we seen that where the clients made sales for a week or two or a month or two and they forgot to change that rate? And then they're liable for what they didn't collect, So with this new automated sales tax, it's going to pull in those rates automatically. And you may or may not see it in QuickBooks Online. If it's somebody that's new to QuickBooks Online, the automated sales tax will be in there, and also possibly on desktop conversion. So everybody doesn't have the new automated sales tax yet. So keep that in mind. There is still the option that you can use the manual sales tax in QBO. You don't have to use the automated one. In this one, if you're doing the manual one, you do have to input those sales tax rates. If the rates change, you have to change that rate. If you have a sales tax holiday, you have to go in and change all that. So you have to set up those rates manually. You have to set up all those combined rates. If you're legacy QBO, meaning you've been using QBO for quite some time, you probably still have the manual sales tax. And people can opt out of the automated sales tax. They can choose to calculate manually. So you may see the manual sales tax center out there in those situations. Go ahead, Dan.
All right.
So with the sales tax, the automated sales tax, really all you have to do is add the state sales tax. And QuickBooks is able to look at the address and all that information to know which local and district taxes. So you don't have to put the city and the county and the state. The combined rate is, 9% or something like that. QuickBooks will know that and be able to get that breakdown and everything. So it's calculating these sales taxes based on the location. So if it's a retail store, it's the seller's address, unless we're shipping it or delivering it, because a lot of states are actually destination-based sales taxes. If you ship it somewhere, the sales took place where it's shipped to, or if you're delivering it, the sale took place where it was delivered. And so those are some things to keep in mind on the location, especially now. And I know we had Avalara on, I don't know, a year or two ago talking about the Wayfair ruling, where if a company sells a certain amount in a certain state, that could trigger Nexus for them. So if they're shipping, especially now with all these online sales, if they're shipping and have sales over a certain dollar amount in a certain state, that could trigger sales tax for them. So you really have to pay attention to a lot more than just where is the physical business located. What is the product or service? And you're going to hear some wacky things from Clayton in just a minute on what is and is not taxable. And that's what gives me, that's what makes me nervous, because I don't know all those details and I know I'm going to get something wrong in the setup of it. But sales tax calculated on what is the product or service that you're actually selling, and then also the customer. As you know, some customers are non-taxable, and you need to set that up, as well as get their exemption number if they are non-taxable. Go ahead, Dan. And, as we're going through this, I just want to mention as well that in the advanced training, there's a whole module that talks about the new automated sales tax in QBO, an hour long. So I'm just highlighting some of the things here. But here's where, based on the product or service, you need to go in and say what applies here. And that's where you have to know what exactly is it that they're selling and be able to choose that. So under, what kind of software or technical support are they saying? Look at all the options over here. Under, you can't just say, oh, we sell software services. There's a lot of options. Is it mandatory? Is it optional? Is it software technical support? I mean, there's just all these details where you have to indicate, is this product or service taxable or not? And if you get it wrong, the liability is on you if you're doing the setup. And that's what scares me. And I like to have an expert to do that kind of stuff because I am not a sales tax expert. Go ahead, Dan. And also it's calculating based on the dates. As I mentioned, it's going to track rate changes and it will recognize sales tax holidays. And I love this. A lot of you, if you're in a state where they have, let's say, the back to school sales tax holiday, for these 3 days, clothes or school supplies or electronics below a certain dollar amount, they're non-taxable for these 3 days, and then it goes back. Well, if you're doing manual sales tax, you have to go in and adjust all that for this 3-day sales tax holiday and adjust it back. With QBO, it's pretty much automated. There is a little bit of setup, but it is a lot nicer in that respect to have that automation available to us.
Yeah, and I wanted to point out here this screenshot here on this slide is pulled from an Intuit or QuickBooks email about the sales tax changes for April. If you got that email, it was a long email. I mean, that was the thing, and this is just one section in Connecticut. Like if you look at this, it says QuickBooks will hold Connecticut will hold a sales tax holiday from Sunday, April 10th to Saturday, August 16th for the sale or purchase of clothing or footwear less than $100 per item. And then there's a but, right? Like in order for it to work, you have to make sure that every item that might qualify for that has those sales tax categories assigned to it. So it's kind of like a double-edged sword, right? Yes, it will automatically calculate that, but again, the burden is on you to make sure that it's set up properly in order to calculate it that way. So that's why I put the asterisk there. Some setup is still required, even though automatic doesn't include that's not completely automatic.
Right. Well, and that's a really long sales tax holiday from April to August. Usually it's, just in August, back to school time. But here's some great articles. If it's a Friday night and you can't sleep, get some popcorn, have a drink, and go read about sales taxes. These are just some interesting resource articles that you can check out. But I always recommend Avalara.
Avalara's blog and resources that they have, like Clayton was saying, they live and breathe sales tax every day. So, their website and resources that they have available are great. So let's go ahead and launch our second poll, which is what type of sales tax services do you provide for your clients? So maybe it's research and setup or payment remittance, sales tax filing, or if you're like Michelle, I don't. Sales tax scares me.
It does. I just realized how much I don't know. Clayton's hopefully going to awaken your eyes here and get you to wake up to some of these things that you don't know as well. Right, Clayton?
Well, I am. But hopefully not, sort of that awakening that's like, ooh, I have $100,000 in liability that maybe I haven't remitted through to the state yet. Because, for every time I do hear the story of, well, I sold a $100 item, I charged 10 in tax, I collected 110, and then I spent 110, to reinvest in my product. Whoops. Every once in a while, we'll get the call that says, hey, I just so happen to realize that I've been doing the collecting part. It's just the registration and remitting part that escaped me. And I have some money that I don't believe is mine. And that's, a similar tricky conversation. So I'm going to
go ahead. I go ahead and I went and stopped sharing our presentation so we can pass it on over to you.
Perfect. Yeah, and I think I do a lot of these presentations, and Michelle mentioned it earlier. A lot of them are sort of centralized around the concept of economic nexus. It's like this newer, awful thing to the sales tax party, which really has a lot of companies, that are in, a smaller business, or they're getting going, or they're not, Coca-Cola or Levi's. It's caused some challenges that maybe at one point didn't exist for them. So we're not going to talk a ton about it because we typically do. But what I will hop into, we're just going to kind of do some, I love this one, weird, wacky, wild, not so wonderful, as Dan had pointed out, world of sales tax. And we're just going to talk quickly a bit about, who Avalara is. I'm not going to give you the 1,000,000-point slide, of all the things we do, but effectively, we're a software company, and we're just a group of people that help, all companies of all sorts and sizes try to automate and navigate sales tax. And when we say sales tax, we've touched on a lot of parts of it. Sales tax in a lot of people's minds is synonymous with calculation, but it's also registration and remittance and filing and payment and, ensuring that I'm doing it, it's done and set up correctly, because and a lot of the times if the input is no good, the output's going to be no good. But we've been around for a while, and we do help companies just try to navigate this beast from end to end. We always have this slide, and it typically goes second. And I think what is fundamental, I've been with Avalara, this is my 10th year, and there's been a real paradigm shift. Whereas 7-8 years ago, this was a Coca-Cola problem. This was a Levi's problem. This was a mid-market plus, enterprise. I'm a very well-established business, and therefore tax is a pain for me. And look, the rise of e-commerce, kind of the rise of technology, the ability to sell products, services, et cetera, to different people in different places, it really has brought about a set of laws that make this an every business problem. And no longer can I be, an e-commerce seller, and I have my warehouse here, and I'm shipping stuff out. I'm only located in my one state, and therefore that's the state that I have to think about. That world just doesn't exist anymore. So more so, this is becoming a problem that, if it's a company or an advisor needs to be at least aware of, to try to make sure that you don't have that aha moment where I have too much money, I don't have enough money, or I've just been doing this wrong.
Yeah, I think that's a big, over the last, 2 years, that has really shed kind of light on what's really happening, because, there's a difference between, physical presence versus, economic presence. We've had a conversation, with our tax preparers, like, well, one of you is in California, one of you is in South Carolina, and one of you is all over the place, right? Do you have sales in those locations, right? Like, you got to at least to be in compliance when it comes to that sort of thing. When you have a virtual business, but you're physically located somewhere.
No, yeah, spot on, Dan. And once upon a time, the checklist was physical, right? Do I have people, property? Am I going? And that concept, while it had a myriad of different flavors of the law and caveats and what ifs, and this state does this and that state does that, which is the only consistency in sales tax policy. But now you had, a whole host of other sort of, how much do I sell into different states? There are a lot of laws that were aimed, at least in the public eye, about e-commerce, but they're really not e-commerce laws. Like, they impact everyone that sells services, software, across state lines and across borders. So, and that's kind of the first check mark, right? As we talk about just the different components that make up this wild, crazy problem, it's nexus. It's like, okay, where do I actually even need to be compliant? It's physical, it's economic, it's how do I operate? How do I think about my inventory strategy? Oh, wait a minute, I also have to think about tax, like inventory. That's something that's interesting to me. Like, I like that. I'm going to come up with a cool new way, or leverage something to deliver something in a way that makes my customers happy. Well, unfortunately, inventory is one thing that can trigger responsibility to register and start complying with local tax laws. And then, we touched a lot about it. Where do I need to be compliant? All right, is what I even sell taxable? And that's such a good, that Connecticut sales tax holiday is such a good representation of the complexity. You had a date, it's 6 days out of the year. The other 300 plus, don't worry about it. You had a specific thing. It's clothing. Is it belt clothing or shoes clothing? Like, okay, well, there's a little bit of complexity there. And you also had a threshold. All right, hey, if it's $110, forget about it. But if it's 98, super important. Because the other component to it is a lot more of these consumers are maybe going and buying clothing on April 13th. Like maybe they know that sales tax holiday is there. So on the flip side of compliance, you have customer. And if you're overcharging or you're charging tax during a tax holiday, is Connecticut gonna, gripe too much? Probably not, as long as you pay them their money. But the customer may call you back and say, why are you charging me tax? Like, I'm specifically buying today because it's my back to school holiday. This is when I buy my clothing for my kid for the year. So I thought it was a really good example of the sort of layer of complexity. We'll talk about some funny ones that maybe make a little bit less sense, but that'll be coming in a minute. Michelle touched on jurisdictional assignment, what side of the street, how do I get state, county, city, local correct? And then you add the other layer of taxability complexion, which is who am I selling it to? Am I selling it to, a charity, a nonprofit, government, someone that's going to be reselling? There's a myriad, in the construction, there's a bunch of different reasons why the person that you're selling it to may cause a $0 tax to be applied to that invoice. And another great example, like if you did everything perfectly and you mess up the tax return, or you don't file a tax return, or you do it in a way that isn't a perfect aggregation of everything that happened until that point, well then what did we spend all the time, energy, and money doing it for? Because you're going to get some questions, maybe you get audited, or you sit in one of the worst case scenarios where I have a bunch of money or I don't have any money at all. And so that's kind of the challenge across. And I have a couple of slides that I'll kind of blast through because I don't think that this costs companies money. And I'll point out a couple of things because I always think it's kind of, you throw out a big number and 63 to hundreds of thousands of dollars, maybe not for a smaller business or a business that's getting going. But what I point out, is that bottom left hand and Michelle touched on it, Dan touched on it, like, these are smart people, these are accounting professionals. And even tax pros, like 75% think, probably if I get audited, they'll probably be able to find a mistake. And those are the professionals. And so you have this, like, it's intrinsically complex. As you go and you think about new ways to do business, or your business is growing, it becomes more complex. It changes a bunch. There is a real cost to being out of compliance. And even the people that this is their job think, I probably made a mistake. Kind of speaks to how hard this is for companies to navigate. So this is an exercise in not burying the lead, I suppose, and whoever put together this deck. Sales tax audits are not fun. Who would have thought? If I can convince you of one thing in this entire presentation, let it be this slide, because I think we could probably all agree about that. But look, when you do something, there are some hysterical stories. Well, not hysterical, but like the way that companies get audited, which is a question I get quite a bit. Like, am I going to get audited? And the answer is, I have no idea. I hear stories about, an auditor was sitting, in a room eating lunch and overheard someone talking about some component of their business, and that's how it started. A lot of the times it can be due to a mistake. I didn't file a tax return for a couple of periods, or I filed a tax return completely wrong. And then at the end of the day, if you do it wrong and you get in the event of an audit, it can be very, very costly, which again, probably isn't shocking or news to anyone on this call. So quick, as we look at tax broadly through the lens of sort of indirect tax, there's a bunch of kind of different flavors and varieties. Bev alc, tobacco vape, lodging hospitality. I know we had mentioned, convenience stores and gas stations, which bring a whole host of other complexities. That's not just, did I get the state, county, city tax right? And am I taxing my candy correctly? Thank you for not stealing my thunder, Michelle, earlier. I love it. Because that's on the slide. Don't worry about that. But, these other like lodging tax is just incredibly complicated. And so there's a bunch of different industries which have an additive layer. We won't go into it in too much depth, but we have some solutions for companies that are in one of these categories as well. All right, now to the slides that everybody came for, which is to learn some funny stuff about sales tax that's not quite as serious about audits or what have you. And then we're going to go through a series of can you guesses and all real life examples that, I guess the takeaway here is, what? Like, how could it be so complex? Like, how could one state say, okay, this instance here and that instance there? Well, I don't expect, I don't know, hey, maybe you got a convenience store here and you sell these four products. But there are a lot of very more sort of, examples that span over more typical industries. So New York taxes, some powdered beverages, but one of these is exempt. What's it going to be? We've got a little drum roll. I'll do on my desk. And the answer is Tang, and not just because Avalara typically wears orange, and we did a little lobbying out there for Tang to be non-taxable. But if you're selling Tang out there, don't worry. Tang is on the exempt list, unlike its counterparts over in the Kool-Aid, Country Time, and Crystal Light categories.
Why
is that? I mean, what is it about Tang that it causes it? Again, the takeaway there is what? But what is it about Tang that makes it?
You know what? I'll answer that as we go in the next couple, because there's a couple of similarities in sort of food. You're going to ask the same question about this one. I actually don't. This is the one that I don't know the answer as to the why, because this to me is almost the most perplexing, because it seems just contrarian. It seems to be the opposite of what you'd think. So Oregon is a nomad state. There's 5 states that do not impose sales tax like the rest. So Oregon is one of the 5 states that actually doesn't have a sales tax, except for one of the following products. And I would have gotten this one wrong 3 times before I got it right. Because the thing that they tax is sales on bicycles, which, again, to me, while you have other states out there making purposeful efforts to reduce and create tax exemptions to, encourage alternative modes of transportation, which, in Rhode Island, I understand that. Bicycles is one of the things that there is a tax imposed in Oregon. And I don't know, maybe Oregon just sells so many bicycles that they say, hey, we're going to tax some bikes this year. So I actually don't. I'm gonna chase the answer to this one down because I do not know, but I was very surprised.
Yeah, that's it's definitely the paradox of of sales tax. Especially progressive state that wants to do these things and then taxing the bicycles. I think they also have a registration for bicycles as well, where you have to register your bicycle. It's this weird kind of inherent conflict. And I don't, I'm not the foremost authority on, tax policy at all, but you think that on one end, like a lot of states' budgets are heavily reliant on tax dollars. And at the other end, it's like, you'd think a state like Oregon would want to encourage people to ride bikes. And David in the chat brings up a valid point. The state gets tax on gas for the other types of transportation, but nothing on bikes. So maybe that's the thought behind it.
Yeah, absolutely true. The puzzling thing though is that they don't have a sales tax, so they carve out this exception. So while they do have excise tax on fuel, it's almost as if like you buy a coffee cup, no tax, but you buy a bicycle, yes tax. So I don't know. So this one will introduce. It's another sort of transportation tax, and you can probably guess as well because you're looking at the motor vehicles, but The hot air balloon is a tax-free ride, whereas the other ones are, you will be charged tax. As long as you're not tied down.
Michelle and I were talking about that. It's like, how many cruises are there in Kansas? But
that's a good question.
Yeah.
That I don't know. My guess would be
Missouri River is not that wide.
Yeah, well, you get
the Missouri River
small,
is nowhere near Kansas.
You get the very small cruise ship with the oars going on, something to that effect. But I think the interesting. I'll cop to the fact that I haven't talked to many people that are calling again saying, "Hey, I'm in Kansas and I'm taking a cruise. I'm wondering about the taxability of that service." So yeah, you got me there. So this is an interesting one though, because this goes into like you have this like sort of surface level or high level view on sales tax, and as you get into the details, Michelle brought up software. It's a great one. It's the gift basket scenario. Where, okay, I got a fruit and I got a bunch of food in a gift basket that's non-taxable. But if I put my mug in there and I charge for the gift basket as a whole, all of a sudden everything becomes taxable. So this one, seems to be that if you're tied down, maybe the taxability differs than if you're flying, in the air in a hot air balloon. So once again, here is the one, and this answers, I think, a little bit to the question that was posed on the Tang thing. And this one, unlike the Kansas cruise scenario, I have talked to tons of companies that have faced this, and most notably recently a gentleman up in I think Chicago or a suburb of Chicago, and he just had an auditor. The auditor was going around and auditing all the convenience stores and just picking out different candies that they know are either taxable or non-taxable in the state. And that's because in a lot of states, not all candy bars are created equal. And that's because if they include flour, they're considered a food, not a candy. In a lot of states, they tax candy, but they don't tax food, or food is taxed at a reduced rate. So you have all these, we used to have a slide and it was Milky Way versus Milky Way Midnight, which is like taxed differently in a state because Milky Way Midnight had flour in it. This is one where I have heard it quite a bit, where it just auditor comes into a convenience store. They say, "Hey, I want to see, your sales," and they're looking for sales of, Twizzlers versus Snickers with peanuts. So the inclusion of flour, the inclusion of the product, the inclusion of support on a deal where you're selling a software license and the support's optional, all of a sudden changes the way that you need to think about it.
Well, and Clayton, isn't it like, I think in New York, like if that's why the bagels are all sold whole, because if you slice the bagel, now it's like a meal instead of it's taxed differently if you slice the bagel.
Prepared food.
That food
just became prepared because you sliced it down the middle and you put some cream cheese on it. And the way that they tax prepared food versus, food is different. You think the train of thought would be, going out to eat or getting a prepared food is a choice versus having to buy food is a necessity for the people. And it's this weird, like, again, I could understand, sort of unlike Oregon, I could understand the why, but it manifests itself in such a weird way in practice when you're like, wait, slicing the bagel, like what is this tax on my, all right, I'll take my bagel whole, I'll do my own slicing.
Crazy stuff.
Yeah, and this is a good one, and I think we just
I was interested in this one because it'll definitely serve up as I'm a nomad, but not in the nomad states. But this will definitely this perked my interest.
Yeah, I got to update my bio because I just moved from Seattle to the great state of Maine. And so I'm kind of keenly watching the snow leave and maybe be able to get outside, which I love to do. But for campgrounds in Wisconsin, and again, this speaks to the level of complexity that, okay, if I do one thing, you just think, okay, I want to run a campsite. I want to run, something that allows someone to come and camp or, an RV or something to that effect. And all the different things on the, camping from rustic to is there electric hookup to is there disposal, it all changes the way that it is or is not taxed. And again, something that just seems innocuous and simple in the sense of it's camping, people. Nope, camping is not exempt, so to speak. It is crazy complicated in Wisconsin as well.
I'll be avoiding Wisconsin.
Yeah, Dan, and sometimes it just doesn't. And I've done this. Like I've searched for the why. Okay, why? And sometimes there's just no why. It's just like that's been the law forever, and it's just never been changed. And someone came up with it at some point, and we just haven't really gotten around to being like, yeah, this is crazy. And I think this is the last one because I want to be a little bit mindful of time if we have some questions. We also have, maybe it's the size of the container of the ice cream, which determines taxability. Are you going to eat it all in one sitting, or are you going to break it up in a couple of sittings? I just made that up, but I don't know. I mean, right? 16 verse 14. You'd think that there's some why around the use, but it manifests itself in such a complex way. This is the last one, a little bit different. It speaks to Michelle's point earlier. There's been a lot of really awesome, updates with respect to how tax is calculated in QBO with automated sales tax, and really some niceties to help actually apply rate updates or rule updates. Because in 2021, these things are not static. There was over 6,000 rate changes, updates to rates, to rules, to boundaries, right? Maybe the rate didn't change, but the city boundary updated. So this stuff never stays the same, unfortunately, and it's intrinsically complex.
Yeah, I mean, like you would think, sales tax, it's a yes or no type of question, but then now there's a yes or no, but with a yeah but thrown at the end.
Dan, it's simpler than that. It's 8 yes or no questions for every single thing. You just got to answer all 8
correctly.
Correctly, indeed. And then inevitably 6,000 times a year, that the answer to one of those 8 is going to change. How are we doing on time? I can.
We got 13 minutes for the top of the hour.
I thought I was going to try to leave 10, and I think we're going to be on track. So just really quickly, and I won't dive into all of this, but Avalara does have a bunch of ways to support the different complexities that we've touched a bit on. I've loved to see the progress in a QBO and some of these like source platforms, the platforms that you live in, where the way that you get a rate application isn't the nine Texas 2-step answers. So sometimes companies say, like in this instance, I really need help with the determination part because it's intrinsically manual and I have to set up rates and rules and boundaries. And I need to define it's taxable here, it's not taxable there. So we do have a bunch of solutions that helps with that part as well, the calculation component. And then, we have a whole host of solutions. We didn't touch too much on customer exemptions, but when I have, a situation in which the company, the entity, the person that I'm selling to, not the product that I'm selling, but the person I'm selling to, it's a reseller. It's federal government, it's state government. They have a reason that they say, hey, don't charge me tax. You say, yeah, that's great, but I need the proper documentation to make sure if I get audited, they look at an invoice says 0 in tax because you sold the ClayGoodhughesShirts.com. Well, yeah, I sold that shirt. Clay Goodhue is going to resell that shirt. Here's the certificate that proves I didn't need to charge. We got some good solutions to manage the life cycle of that certificate because there's certainly plenty of intricacy there as well. And then some people say, hey, look, I got to figure it out in QBO. I've set it up correctly. I've relied on some expertise to make sure that I have my state selected, my items mapped. I know the difference between canned software, custom software, and optional support. But boy, I do not like the aggregation and filing and remittance and payment and treasury. So Avalara has some solutions that can help, with the sort of the final step, so to speak, in the compliance.
And it's my understanding that Avatax just kind of sits in between where you're creating the sale and the calculating of what actually is being sold and taxing and that sort of thing, right? Is that the basic gist of what Avatax does?
Yeah. So the basic gist. So if you look, and if I was to go back to that slide where it has like nexus and registration, calculation, certificates, treasury payment, remittance, Avalara has a solution that basically helps automate every part of that. And some companies say, great, because I don't have any of this figured out and I don't really want to figure it out. So let's just automate from end to end. And then some companies say, well, I have some support. I have a filing solution, but I need calculation. I have calculation, but I need help with, international or something like that. But for Avatax, which is the determination solution, so how do I get tax back on an invoice or, on a website? That's exactly right. It basically says, instead of like pointing to something that I've set up, call out to Avalara. We have some basic setup on our side, which defines, where is it that I collect tax, tracks, your progression towards being, needing to register in additional states. And Avatax is the thing that sits in the middle that integrates with the different places that you do an invoice and automatically calculates this for you.
Yeah, I've seen it in action where it's like, where I didn't know that they were using Avalara, and then they record a transaction, then all of a sudden Avalara comes up calculating, and then it spits back and it's pretty quick, right? I mean, as far as doing that sort of thing, but it's kind of, even I know what you guys do, but it's good to know, reassure like what it actually does. And the other thing that's really nice is that you do more than that, and they can pick and choose, what works best for them to fill the gaps of whatever it is that, they need with regards to sales tax. But Michelle, I was
yeah. So I was going to ask a question, Clayton. So I know Avalara has people where, if we need advice for a client, do they have nexus? Are they liable to file in certain places? But like I mentioned to Dan, I was talking to this gentleman that has a pool business, and they go in and they clean the pools, and he might go buy, let's say, a pool liner. Let's say it's $1,000, and he pays the sales tax when he buys that part or materials or whatever you want to call it. So he pays sales tax on it, and then it's reimbursable expense. He's passing it through to the customer. And I was telling Dan, I don't know if that's okay. I don't know if he's supposed to buy it as a reseller and then charge sales tax to the customer. I mean, taxes are being paid and collected, but is it his responsibility? Is that something that you all can help us with? In addition to this product is taxable or not, is this client liable for taxes or not? Sales, to collect and remit them. Can you all help us with those kinds of client questions?
Yeah, the short answer is yes. The longer answer is maybe. Just like I just said, we'll just pencil that answer in for basically every question you could probably ever ask me. So we don't. There are state and local tax practices, like they are consulting, they are helping companies define tax policy, create tax strategy. We don't do that. But for a lot of the kind of questions, if it's just someone to talk it through, or if we have a bunch of tools that, I was reading an interview with our CFO, and the way he says it's like the Google for tax answers. So we have some research tools which just lay out the laws in terms that I understand, that regular people understand, and that get to the question of, because like the reality of that question is there's no sense in, like, I can't tell you what the solution is because we have no idea what the problem is. Like because you're right. Like, should he be providing a resale certificate, not being charged tax, then charge tax on the pass-through? And so if it's a conversation, if it's a piece, a paid for service or a piece of software that helps get to the simple answers, or in some instances, it's a conversation with Avalara and it's a referral out to a state and local tax person to help do some real, roll up the sleeves and talk about tax strategy, we're not a bad place to start.
Gotcha. Well, one of the things that I have learned over the years is, let's say I have this question and I contact the state revenue department. I want to ask them. And let's say they say, oh, no, you don't need to worry about it. And then you're audited 3 years from now and you find out, yes, you were supposed to be collecting and remitting sales tax. And you say, but I called the state. That doesn't work unless you've got something in writing. So you can't even call the state and rely on the answer that they give you.
Oh, you're talking Clayton Goodyear? That guy's been gone for 2 years. He was giving some terrible advice out.
Right.
Oh yeah, and you nailed it. Like, get it in writing. Because I have definitely heard that as well. And I used to say, hey, look, I don't know what to tell you. That person no longer works here, or that person doesn't remember the conversation that they had with you 3 years ago, and the auditor is someone completely different.
Yeah.
And one of the things that we didn't even talk about, and just I saw it scrolling by in the chat, is use tax.
Mm-hmm.
And the thing that I hate about use tax is it's so hard to find the answer, because use is such it's such an easy keyword. To actually get something that is specifically towards use tax. Can you talk a little bit about what use tax is and what it's used for?
Yes. Yeah. So use tax is, I think I think we have some slides on negative audit findings across everything, and the proportion of negative audit findings that is use tax, and it leaps off the page. So use tax, more specifically consumer use tax, is it's the purchasing side. So if I buy, theoretically, think about the world before all these laws. If I was to buy a sweatshirt and the selling party didn't charge me tax because maybe they didn't have a responsibility to, like, there are still sales where I sell it in a different state, but the state can't make me the one that's collecting and remitting the tax on its behalf. Consumer use tax is when I buy something, I consume it, I wasn't charged the right amount of tax, or I wasn't charged any tax at all. So now I, as the consumer, have the responsibility to accrue tax that I should have paid to the person that I bought the item or service from, and then pay that tax through to the state. So that's the most generic answer. The way it manifests itself in construction and a lot of different places is way more nuanced. And to just speak to the complexity again, as we think about, it's not a yes or no, it's 8 yes or no's. It's like, hey, I'm buying something and it's, is it or is it not going to become a part of real property in the construction space? Okay, maybe I can answer that. Tell me what the definition of real property is, because inevitably that's not going to be the same state by state either. So you get into this, like, am I buying things? How am I using them? Am I using them for projects? What is the definition of when I need to aggregate consumer use tax? When do I not? It is inherently complex. A lot of the times when we talk about helping a company with use tax, it's the research piece, it's the understanding, it's how does this company treat real, or the state real property versus this other one. So super complex, Dan, and definitely something we can chat about.
Yeah, and I'm going to throw out the last poll question, because what it really boils down to is when you have these specific situations, starting with Avalara as a starting point would be great, right? Like, so that would be what we would encourage you to do, is if you have these specific questions and want to make sure that you're setting it up properly, start with Avalara, start with a conversation about Avalara, and maybe you might want to understand during that conversation, I don't want that burden. And I have someone else on my side that can sit on my side of the table and help me either take some of these sales tax burdens off my plate, so that you can really focus on what it is, your core services that you're offering your clients.
And I saw that Jamie put her email address in one of the questions out there. And I know it's also on this last slide here. And that's where I just encourage you. I mean, one of the things about being a professional is knowing when you don't know everything, knowing when to turn to other experts. And, like Dan just said, this is an area I'm not going to waste my time trying to figure it out, because, it's too complex and it's just not my area that I want to specialize in. And so I do contact Avalara and recommend Avatax for a lot of these clients just to avoid the liability myself as well. So we need to know when to get expert assistance. And this is a big area where I think we need to do that a lot.
And real quick, you know what the other outcome is of calling someone at Avalara or, listening to me or tuning in? You may say, hey, I'm in Oregon. I'm not selling bicycles. I'm selling coffee cups and I haven't triggered Nexus anywhere else. Cool. I can sleep this Friday night. I'll have to read one of those sales tax white papers, right? So, there are plenty of times when, the effort of education says, okay, like think about this, or I got to go do that, or I have a problem. And sometimes it's just like you did the due diligence to realize that at this point, maybe you are in an industry or you sell in a way that this is, a problem that you keep a pulse on in the future. And doing it that way, that's a much easier conversation than, hey, I spent all the tax money that I collected. Wish I would have chatted about this earlier.
Right.
All right. So we're at the top of the hour. So Clayton, I appreciate you joining us today, especially on short notice. For those of you who don't know, we actually have another speaker from Avalara scheduled to join us who came down with something. So Clayton so graciously came in, pinch hit for him, and did a fantastic job explaining some of these weird, wacky, wild sales tax nuances,
and not so wonderful.
not so wonderful. I'm gonna add that to the titular slide. All right, Dan and Michelle, thank you for having me. It's I love this format. It feels conversational, which sometimes it's hard to do on these. So thanks everybody for tuning in, and thanks to you too.
Well, you did a wonderful job. Thank you, and Jamie and Dan. Thank you as well.
All right. We'll see you next time on the QB Power Hour, where we talk about data migration from desktop to online, best practices, and a demo.
And don't forget to share and watch for the lucky winners later today.
Exactly.
And I do like Dan's glasses. I agree with that comment from earlier.
Well, thank you. Have a great day.
Thanks, everybody.
We hope you enjoyed listening to the QB Power Hour podcast. If you have any questions, feel free to ask them in our Facebook group. You can find those resources and much more at qbpowerhour.com.